Hello everyone, I hope you're well. Welcome to the Dubai Property Investment Podcast, episode 3. I'm your host, Nick Highland. I'm the CEO of Masar Capital here in Dubai, and I also own Track Capital in the UK, which is a property investment agency. So we help investors from all over the globe purchase in Dubai safely and securely. Now, one of our big markets is the UK, so British investors and European as well, moving into the Dubai market, looking to diversify and snap up some opportunities here. So this video today and podcast is all about the differences between the Dubai real estate market and the UK real estate market, or the UK property market. So what I'm going to do, I'm going to reel through 10 differences that I see, having experience in both markets, knowing developers in both markets, investors in both markets, etc. There's a couple of points that would be really helpful for UK investors to know when they're considering purchasing in Dubai. So I've got my notes down here, I've got my 10 differences, so we'll reel through those now. So kicking things off, the first one would be the variety of stock. So when you're looking in places like, Manchester, Liverpool, which are some of the higher performing UK regions or cities, when you compare that to Dubai, the vast supply of stock here can be overwhelming. So in Liverpool and Manchester, at any one time, you might get, 3, 4, 5 quality opportunities that match your criteria that you can choose from on the market at any one time. Here, however, given the scale of the development, the vast range of developers, the diversity of Dubai in terms of the locations, you're going to have 30, 40, 50 projects to choose from. So there's a huge amount of supply in the Dubai market. So you've got to be really careful in what you pick and what you go for. And when you compare that to UK regional cities, the level of variety in the stock is significant. So that would be point number 1. Number 2 is that the Dubai market does offer higher rental yields on average than the UK. Now, obviously, this is difficult to apply universally. In other words, different regions of the UK obviously have different rental yields. The same in Dubai, different locations will have different rental yields. However, in general, you can secure quite attractive rental yields here, both on the long-term let market and the short-term let market. So on the long-term let market, you might be looking at, 7% as a net figure. On the short-term let market, you'll be looking at that 8 to 10% mark. For what's considered a prime city, those are very attractive rates indeed, especially when you compare them to the likes of, London, even Birmingham nowadays, obviously New York, Hong Kong, Sydney, Paris, etc. So do keep that in mind as well. Number 3, or the third difference between the UK and the Dubai market, is the fact that if you purchase here, even if you purchase an apartment, you're going to be buying a freehold property, and you're also going to have a car parking space included in your purchase. So that's a big, plus point for UK investors, because they're used to buying leasehold apartments. And as many of us know, in the past, before the new regulations, there was ground rent charges, but also the level of flexibility and the fact that someone else has a bit more control. And when you're signing, or once you've signed the lease agreement, they are a couple of downsides. So having that freehold aspect when you purchase in Dubai is a real plus. Number 4, this one does shock some people when they're new to the Dubai market, and that's the fact that no solicitors or legal representatives are used during the purchase process here for most investors. So what will happen is developers will issue what you call sales and purchase agreements. So that's your main legally binding contract. Once you paid your booking fee, that will be sent to you to review and to sign. Now in the UK, you would have a solicitor, advise you and go through the contract terms, etc, maybe request some changes. Here, what will happen is the developers will just send out a standard sales and purchase agreement, which they've agreed and structured effectively, and then every buyer will get the same one. You either sign it or you don't. It's as simple as that. Now you can obviously appoint independently a legal professional to look over the contract, but 95% of buyers won't do that. So yeah, do bear that in mind as well. The 5th difference, and what can make the difference between buying in Dubai and not buying in Dubai, especially if you're using it as a holiday home, it's the spec of the developments here. So when you see the brochures, the videos, the images, what you'll see is, the big swimming pools, gyms, yoga rooms, meeting rooms, business lounges, outdoor cinemas, etc. So the actual specification of the builds here are significantly more attractive than standard buy-to-let investments in the UK. It is just a lot more glamorous in general. So what happens is developers, they do have to compete and keep up with the competition. If they don't have a strong quality product, which tenants really, really want, they'll simply just go elsewhere because they do have that opportunity to do so here. So keep that in mind as well. Now that's really advantageous as well if you're looking to use the property as a holiday home, like for a couple of months a year, a couple of weeks a year. Obviously when you come here, you want to stay somewhere nice and have that holiday feel. So a lot of the developments here will give you that with the, as I say, with the on-site amenities that I mentioned. So that's a really, really good advantage as well. Number 6 is more about the market sentiment and the buying patterns here. So when you buy in the UK, a lot of people are looking for ready properties. You know, there is a big off-plan market in the UK. However, it's not always a massive discount. Okay, sometimes new builds in the UK are actually quite overpriced. When you're purchasing in Dubai, firstly, the off-plan model here is very, very popular. Around 50 to 60% of the entire market transactions done per month is in the off-plan market. So what we would call the primary market as opposed to the secondary market. So you're buying at base pricing direct from a developer. Now there's a reason why it's so popular here. The typical reasons are you get a big discount, which is a genuine discount, which you wouldn't get in the UK. Obviously, you can pick and choose your units, your aspect, your view. Now, that's more important here because you've got to be more picky with your unit to make sure you're getting one that's going to be in demand. So having the ability to select that unit and really understand where that unit's going to be positioned in the development is going to be, paramount to the decision-making process. And number 3, probably the biggest one, is the payment plans that the developers offer. So in recent years, they've tightened up a bit and been a bit less generous because of the demand in the Dubai marketplace. However, in general, you can spread your deposit through the construction period. Some developers will offer post-handover payment plans, and of course, this is going to be interest-free. Now, some developers will charge you a slight premium on the actual ticket price or the purchase price of the property, so do keep an eye out for that. But in general, these are interest-free payment plans. So in a market which is quite cash-heavy, the mortgage market is far less mature here than it is in comparison to the UK. These can be great incentives for buyers, so keep that in mind as well. The payment plans here are vastly more available and more attractive to what you would find in the UK market. So yeah, that's sort of why investors will go for off-plan property. That payment plan is a big one. So moving on, I've already covered the off-plan aspect and the payment plans as well. Perhaps, obviously those are positive reasons, but perhaps one of the more negative sides would be the customer service levels here. So in the UK, British culture is, believe it or not, actually very efficient, very professional, very polite at a business level and, even at a startup level, etc. Here, it's not always the case. Just because of the vast array of nationalities, different operating standards businesses have here, it means that the customer service levels and the levels of professionalism in general, on the whole, are not as good as what you would find in the UK. So you might find that agents, developers, whoever you're dealing with, you might find that they take a bit longer to respond. You might find that when they do respond, that their level of detail in their response is not what you would expect. They might give you very brief answers to questions. You might find that they're not always readily available on email. They might not always answer their phone. Like what we would consider basic things in the UK, in Dubai, in the UAE in general, it doesn't quite have the same level of, urgency, response times and customer service that you would get in the UK. Now, it's not a great issue overall. And the way you get around this, as you would expect me to say, is to deal with a good quality broker who understands your culture, knows the purchase process in your own country and can kind of translate the Dubai and the UAE market and really, really bridge that gap. So they can do the follow-ups for you. They know who to speak to, when to speak to them, typical response times, regulations, fees, purchase process, contract terms to look out for, the buying process in general, etc., etc. If you've got someone on the ground here that knows that information and can relay that to you in a professional manner, then that's going to be worth its weight in gold. So do take that, on board as well, that the customer service levels here are not quite as efficient as you would get in the UK. Number 9, again, perhaps more on the negative side, would be the pace that the market moves here, okay? So we'll get investors that are, based in the UK. They're going to take, a few weeks to read the information, do their due diligence, research, etc., and then they'll come back to you and make a decision. The reason that they're taking that level of time is because they're used to the UK market speed, which is a lot slower compared to the UK. And when I say market speed, what I'm talking about was the rate that properties sell, the speed at which properties sell here, both on the secondary market and on the primary market, i.e. off-plan from developers. Now, this is probably, a big sign of the market, sentiment and the positivity here and just the general market conditions. But to give you an idea, if big developers launch projects like some of the leading companies like Emaar, for example, if they launch a tower on Emaar Beachfront, which is a master community near the Palm Jumeirah, that can sell within minutes. We're talking hundreds and hundreds of units. Less than 60 minutes can be gone. That gives you an idea of the pace that the market moves. And even the sort of media range developers, maybe slightly less ticket prices, etc., in a day, in 2-3 days, the best units will be gone. So you really have to be switched on. You have to be ready to make decisions. You need to work with a broker who's going to get the information quickly to you. As soon as they have it, bang, get it over. And that can be the difference between paying a 15 to 20% discounted rate now, or by buying from a resale unit where you're going to pay a 15 to 20% premium. And when you're looking at 400,000, 800,000, £2 million purchase prices, that's obviously a significant amount of money. So my advice to investors is go out there, speak to brokers, get familiar with the market, have some developers in mind, have some locations in mind. Review the projects, get familiar so you know everything. Then when the right opportunity comes, bang, snap it up. Be quick, make the move, make the decision, and that will enable you to get market-leading, investment opportunities, both in terms of the price, location, developer, and the unit pick itself. So it's really, really important that when you see an opportunity, you've got to move on it quickly because it will be sold. We've got buyers ploughing in from all over the world. So I'm specializing here on the UK markets, but France and Germany are also massive regions for us, and they're buying into Dubai. You look over to India, Pakistan, again, huge buyers here. Obviously, you've got the Gulf region itself, UAE buyers, Saudi, Kuwait, Qatar, etc. And then, of course, the big one in recent times has been Russia. So there is a huge amount of Russian money coming into Dubai. Still, it's seen as a safe haven, perhaps an alternative, for some Russian buyers that used to go into London and the UK market. They need somewhere to put their capital, which is safe and secure, and Dubai, is number one at the moment, without a doubt. So yeah, there's a lot of buyers and interest in the market at the moment. So as a result of that, stock is selling exceptionally fast. And number 10, which is a more positive one, especially for overseas investors that need to do research and make sure that they're making the right decisions. They want to do their own independent due diligence. They want to look at market statistics. What I would say is the system here, and the key point number 10, is that the market is way more transparent than the UK. So you can go online with these slick websites such as DXB Interact, Property Monitor, they're my two favorite. They will present to you market patterns, market data, sales prices, volume of sales, price per square foot changes, new supply coming up in the market, which is a big one. Even right down to tenancy agreements, what the rates are. So you can literally type in a building, it will give you the rates of all the tenancy agreements that have been agreed in that building. Now that's crucial because we can work out real market demand. And as a result, look at the return on investment, look at the rental yields, and calculate all that information. Obviously, we can help you with that, point you in the right direction, give you the information. But if you are overseas and you're not here on the ground, if you can work with a good developer, a good agent, and you can back it up with that market data and research, you're going to be making a really sound investment decision from overseas. So yeah, that would be a really positive point there. The fact that the market is very transparent and this data is readily available. And by the way, this is government data from the Dubai Land Department. So it's actual, real life, information here. It's not forecast projections, 2 years old, etc. So keep that in mind as well. So hopefully that helps, guys. I've obviously run through 10 points there about what the differences are between the UK and the Dubai market. As I mentioned, I've got a regulated real estate agency. Our office is in Business Bay in Dubai, as you can see behind me. So anyone that's here soon or wants to meet up face to face, or of course have an online meeting or discussion over the phone, WhatsApp, email, obviously I'm happy to help guide you through that process of entering the Dubai market. Then as I mentioned, got the sister company in the UK. That's been running around 3 years now. We've got a dedicated team of professionals there, working mostly on the new build and off-plan market in the UK. Biggest market for us there is Liverpool. We also work in Manchester, Birmingham, a little bit in London. Just the ticket prices are quite high there now and the returns are quite low. So definitely the Northwest region is our leading. And we're also looking at secondary cities a lot as well. So places like Preston, Bradford, Stoke, etc., where those ticket prices are exceptionally low and the rental yields tend to be quite attractive. So if you are looking in the Dubai UK markets, get in touch with me. I'll happily guide you through the search and we can go from there. Thanks for your time, everyone. Look forward to speaking to you soon. Cheers.